When it comes to unemployment, President Harry S. Truman once said, "It's a recession when your neighbor loses his job. It's a depression when you lose yours." For the best personal finance content, subscribe to my channel and hit the bell icon to be notified when I post a video twice weekly. In 2020, millions of Americans lost their job due to the worldwide illness. Because of this, many people have filed for unemployment benefits. If you are one of those people, then this video is for you. When people receive their unemployment check, they may have many questions like, does getting unemployment affect their tax return? How much tax do they need to pay? And do you pay state tax on unemployment? And some other questions. If you also have these questions in your mind, then watch this video to the end. In this video, we will clear all your doubts regarding taxes and unemployment. As a quick reminder, I'd like to see you help the channel along its debt-free journey by clicking the like button and helping us reach our goal of 50 likes. Do you have to pay taxes on unemployment? It's the primary question most people have. So the short answer to this is yes, you need to pay taxes on unemployment. The unemployment benefit you receive from the government is usually taxable because your unemployment checks will be considered as income. So it's taxed at the regular rate. Moreover, it's applied to both standard unemployment benefits and expanded benefits that you received in 2020 due to the worldwide illness. Although it's required to have federal taxes withheld from your benefit payments, still many people are opting not to, electing to kick the tax impact down the road. How does getting unemployment affect my tax return? As we already discussed, unemployment benefits are considered as income, just like the money you earned by working. At the end of the year, you will receive a Form 1099-G. This form will report how much money you get from unemployment benefits in Box 1. Furthermore, a copy of this form will be sent to the IRS. The form also shows whether or not you decided to withhold taxes and how much money you elected to withhold. On Schedule 1, unemployment compensation has its own line that accompanies your 1040 tax return. You need to send the amount in Box 1 of Form 1099-G to line 7 of Schedule 1. After that, the withholding amount in Box 4 of the 1099 form will go directly to your 1040 tax return. As you know, this money is taxable. Some of you asked to have the income tax withheld from your unemployment payments. Moreover, in this case, the amount withheld will appear in Box 4. State taxes versus federal taxation. Do you need to pay state taxes on unemployment? BusinessInsider.com reports that the only states that don't collect income tax from their residents are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington State, and Wyoming. If you are not a resident of one of these states, you need to pay taxes on your benefits to both federal and state governments. But you can get some relief if you live in a state that doesn't tax unemployment benefits. States that waive unemployment taxes include Alabama, California, Montana, New Jersey, Pennsylvania, and Virginia. Effect on other tax benefits. Getting unemployment benefits not only makes unemployment compensation taxable, but it also affects some other tax credits for which you might be eligible and are counting on. Furthermore, if you usually get the Earned Income Credit, EIC, every year, then unemployment benefits will not be considered as earned income. However, unemployed benefits do influence your adjusted gross income, AGI, which helps in calculating your Earned Income Credit. Do you need to pay tax on the extra $600? Due to the illness, the government has launched a program known as Federal Pandemic Unemployment Compensation. As per this program, the government provides an additional $600 per week in unemployment compensation to every recipient. So you might have a question about whether this extra money is taxable or not. The answer is yes, it is taxable. But you'll be alright if you elected to withhold income tax from your benefits. However, federal law caps withholding on benefits at 10%. Moreover, if you earned additional income last year, then withholding income tax will not be enough to offset the taxes you owe. What's even worse is not all states are technologically prepared to withhold anything from that extra $600 portion. Many state unemployment systems were found to be subpar even before the illness, and some of them even crashed during the first weeks due to the increased site visits. This means that you might not be able to withhold income tax from your benefits, even if you requested withholding on extra unemployment compensation. How to avoid a large tax bill. Whether or not you withhold income tax depends on your financial situation. If you are facing financial difficulties, you can appeal to put off taxes so you can be in a stronger financial position later on. Additionally, we've compiled a list of 3 ways by which you can avoid a large tax bill when filing your unemployment taxes. Number 1. Deduct job hunting expenses. You can deduct job hunting expenses as miscellaneous deductions on your tax return. To do this, you need to have substantial job hunting or other miscellaneous deductions before they actually decrease your income tax bill. Moreover, the total miscellaneous deductions cannot exceed 2% of your adjusted gross income. Keep this in mind because if your income is much lower this year, you may reach 2% of your AGI more quickly than you expect. From transportation to interviews, keep track of all your job expenses so you won't need to worry about it later on when paying your taxes. Number 2. Tuition expense. Taking classes, upgrading your current skills, or learning a new skill will not only help you in your professional life, but also helps in reducing your tax bill. If you're doing any type of course or learning anything new, then you may qualify for an education tax credit. It's basically a tax deduction for your tuition expenses. Moreover, you can take these deductions even if your classes are not in pursuit of a college degree. And number 3, adjust your spouse's income tax withholding. It's an excellent means by which you can increase your current after-tax income. If you're in a 2-income household, then you can ask your spouse to adjust his or her income tax withholding. If your spouse is working, then he or she should file a new Form W-4 with their employer to adjust the amount of income tax withheld. How to prepare for your tax bill. Are you concerned about the April 15, 2021 tax deadline? If you don't know how to prepare for it, then don't worry. We will help you get yourself together. First, contact your unemployment office immediately and get income tax withheld from your payments if you have not done so already. If you're still collecting unemployment benefits, find out if you can opt to have federal and state taxes withheld. Doing this will not solve your problem entirely because of the 10% withholding cap in place. But it can reduce the impact of those deductions that are included in April's income. Furthermore, ask for the Form W-4V, fill it out, and file it with your unemployment office. If you have extra money available, then you can also make an estimated payment. Unfortunately, the deadline for estimated payment was January 15, 2021. However, this should still be sound information if you find yourself in the same position next year. No additional interest or penalty will be imposed on you to catch up by this date. Currently, many Americans are in a situation where they need every cent of their unemployment check just to get by. So if you have no money to pay estimated tax payments even after taking the deductions, then the IRS suggests that you pay what you can. Furthermore, you could also reach out to them and take advantage of one of their payment options available to deal with the balance. You can even ask for an installment agreement to pay off your tax debt on balances of up to $50,000 over 72 months. To make this request, you need to fill out a Form 9465 with the IRS. Filling out this form can cut 0.5% to 0.25% late payment penalty. However, the interest rate of 3% will continue. I hope this video provides you with complete information about taxes on unemployment. I want to remind you that I am not a tax professional and none of this should be considered as tax advice. Did I miss anything? Let me know in the comments. If you're a YouTuber or are considering starting a YouTube channel and you like my editing style, click the link in the description to get a free trial of my software. Check out these videos on your screen on how to improve your finances. If you like this video, click the like button. It helps a lot. Be sure to subscribe and share the video with your friends. Check the links in the description for offer information. Thanks for watching, and I'll see you in the next video.